What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market, we're starting to see the S&P 500 breaking down through some very critical support levels. Are we about to see the stock market crashing down from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today, SPY was down 2.45%, and we did lose some very critical support because we did break down out of the consolidation, which was the breakdown below 393. We broke down below the 50 EMA, and we came down to this critical support just below 390 and closed right on top of that level. Now, there is a very obvious gap to fill at 381, and I did tell you that gap will very likely fill once we start breaking down below 393. But of course, there is going to be this last support that needs to break, because if we don't break from this support, we could see a bounce in the short term, get rejected from that breakdown as resistance, and then go fill the gap at a later date. So whether or not we go straight down and fill the gap tomorrow, or we get a little bit of a dead cat bounce and then go fill the gap later in the month, is to be determined. But there is a very good chance while SPY is below 393 that we are going down to fill the gap at 381. Now also pay attention that we are getting very high volume, and we've now had 3 high volume days in a row where we did get the CPI data, the FOMC, and then the official loss of the support with today's price action. So things are starting to move more quickly to the downside. Now, there was a gap down open, which could be seen as a breakaway gap, which is only going to accelerate the move to the downside. But of course, anytime that a gap opens, there's always the possibility that a gap fills, and that gap is now to the upside at 396.31. So bigger picture here, we are definitely getting more and more bearish confirmations because we now have the official rejection from the bear market resistance trend line for another 2 times. This is now starting to look like a double top rejection from SPY 408 on the breakdown below 393, and we continue to see high volume selling in this bear market. So the bears are without a doubt still in full control, but do remember that nothing moves in a straight line. But the bears typically do take the elevator down, so there is always going to be the possibility that we just continue to crash down now that we're starting to lose some very critical support levels. Remember, I don't tell you these things because I want to scare you. I simply want you to be prepared, and there is a very real possibility that the selling starts to accelerate to the downside. It doesn't guarantee it will, but you should be prepared for it, so don't do anything overly risky to the bullish direction while we're in such a strong downtrend, seeing high volume selling. Remember, when I say strong downtrend, I'm talking about the entire downtrend of this bear market, where we have a rejection every time we get up to this resistance trend line, and now this negatively sloping 200 daily moving average. So this is a very strong trend and not one you want to be taking lightly, especially after we just got a double top rejection from that resistance. So to the downside, watch for this last line of defense for the bulls right around 390, because if we start breaking that, it's a quick trip down to fill the gap at 381. And below that, we could continue to go lower and possibly even retest the 52-week lows. To the upside, you got that critical resistance around 393 and the gap fill at 396, and that negatively sloping 200 daily moving average right around 402. On the NASDAQ 100 triple Qs, we were down 3.36% today, and the triple Qs also lost the very critical support, which was that level at 280. Remember, while price action is below 280, this looks like a double top rejection from the bear market resistance at 293, which is exactly where we had the bear positioned. And now we are breaking down through the bullish support at 280. This leaves a very obvious gap to fill at 268 with a valid double top price target also at that gap fill. And we still do have the gap to fill from the morning gap down at 283.19. So whether or not we bounce a little bit to go fill the up gap before we fill the down gap, or just go straight down to it, is to be determined. But there is a very good chance while the triple Qs are below 280 that we are trying to get down to 268. Below that, we could retest the 52-week closing lows around 260 or make a brand new 52-week low for the year. The bulls will need to get back over 280 and then back over 288. And we're not getting bullish on the triple Qs until we can start seeing daily price action closes above the bear market resistance at 293. On the Dow Jones, we were down 2.18% today, and the Dow Jones did officially close the gap and hit our downside price target at 331 and instantly found support at that gap fill. You could see that was outside the lower Bollinger Band, but we went and closed that gap today anyway. And initially we did have an arrow getting to that price target a few days ago, so we did arrive there a few days later. So now in the Dow Jones, you have to ask yourself whether or not we're going lower from here, because this is going to be a very strong support zone. So from here, if you're trying to get bearish in the Dow, you'll want to wait for a breakdown below the 50 EMA of support at 330, and then we'll very likely go for the next leg lower just below 325. To the upside, you're looking for strong resistance now right around 337 and 342. And we are below the 20 daily moving average, which is now starting to roll over and get a negative slope, but we are still above a rising 50 EMA. So the Dow Jones has not yet lost very critical support. That's going to require this breakdown below 330. On the Russell 2000 IWM ETF, we were down 2.5%, and we did hit our double top price target, so we can delete the arrow to the downside because we did have that double top rejection from 188 on the breakdown below the neckline at 182, and we hit the price target at 176. We did close outside the lower Bollinger Band, and we do have a gap to fill to the upside just below 179. So as I continue to tell you, there is the chance we could go a little bit higher before we go any lower. With the small caps meeting the double top price target, there is the possibility of a bounce, but we are still looking for more downside while we are below 182, so that is still the critical resistance. We also now have resistance at 178 and 180, so watch those levels as well. Further downside would be the daily support at 174, and then if we break that, we're likely going back down into the 160s. On the ARKK ETF, we were down 4.9% as we sliced right through that support at the gap fill at 34, and we're coming back down to retest the 52-week lows around 32.5. Below that, we can go for the next legs lower at 31.3 and $30, and I continue to caution you this is a strong bear market while below 38, and now you're also going to have strong resistance at 34.6. These Bollinger Bands are going to start to expand, allowing price action to become a lot more volatile. So do respect the fact that ARKK is still in a very powerful bear market with a very powerful downtrend. On the VIX, we were up 8.09% as the VIX is back over the 20 daily moving average and still looking like it just put in another higher low, but we won't have confirmation until the VIX breaks out back over 24. Again, the VIX continues to bounce off of 20 while we're in this bear market, so you shouldn't be getting overly bullish until the VIX can break down below 20 and stay there. Look for more volatility coming to this market as the VIX continues to elevate, looking for that resistance right around 24. On Bitcoin, we're currently down 2.5%. Bitcoin is starting to lose the support of the breakout at 17,550, and we're right on top of the rising support trend line, which is this support around 17,250. If we cannot hold this breakout, it was very likely a false breakout, and we're very likely coming back down to retest the support at 16,000. But as long as we are above the support trend line, there is still the possibility of a bull trend. If we continue to bounce off support, the next strong resistance will be 17,800 and then 19,000. On Amazon stock, we were down 3.42% today, and we continue to see Amazon rejecting below the negatively sloping 20 daily moving average, and the price action is back below all of the moving averages, sitting right on top of the support around 88. Below 88, we're coming back down to 86, and this could start looking like a rejection from very strong resistance to send us for the next leg lower at 77. If we do get a strong bounce off 86, there is the possibility this could turn into a double bottom, but we won't know until we start breaking the resistance at 97 and 102. So continue to respect the downtrend in Amazon and get a lot more bearish if we break down below 86. On Microsoft stock, we were down 3.19% as Microsoft is back down towards the support at the rising 20 daily moving average at 248, and we did lose the support at 252. If we break down below the 20 daily moving average, look for a retest of support at 242, and below 242, we could go down and fill the gap at 228. The bull breakouts will be above 255 because if we break back over 255, there's still the chance we can go fill the gap at 265. On Nvidia stock, we were down 4.09% as we're starting to look like Nvidia is getting that false breakout above the negatively sloping 200 daily moving average with that push outside the upper Bollinger Band. And we're right back down towards the retest of the breakout of resistance at this support at 170. What I think is likely in Nvidia is that we could try to find support at 166, run up there to fill the gap that's still open around 174, and then still come back down towards support at 156 and test that rising 50 EMA. So yes, while Nvidia is looking like a false breakout in the short term, we could get another little bit of a bull trap before we go any lower. And if we start getting consecutive closes back over the 200 daily moving average, that's going to be looking a lot more bullish for a run into the 190. On Tesla stock, we were up 0.55% today, and Tesla is starting to show signs of finding support at our price target near that range around 155, but we did get a very tiny bounce today, so nothing to write home about for the bulls. However, there is still the possibility in the short term that we could get a little bit of a bounce from this level at 155, but I still think you're going to see strong resistance around 160 to 168. Remember, while we are below the neckline around 168, there is a valid downside price target at 138, and it does look like we could get there sooner rather than later. So even in the event that we get a little bit of a bounce, we are still looking for lower prices while we are below this neckline at 168 and the strong resistance at 173. So while Tesla is looking green today on a day rest of the stocks are selling off, it doesn't look like we're out of the woods yet, and it looks like there could be more downside coming. If we start to see Tesla breaking back over 173 and getting back over the 20 daily moving average, we can start to get a lot more bullish, but right now we are still expecting more downside. On Apple stock, we were down 4.69% as the big behemoth Apple is breaking down below the gap fill at 138, which was one of our downside price targets after that rejection at 146. We're outside the lower Bollinger Band on a very large blue chip tech name, so there is the possibility we get a dead cat bounce before we go any lower. The next downside support will be 135 and the gap fill at 133. With strong resistance around 141 and 145. On the financials, we were down 1.96% with the confirmation of that rejection from resistance, and we gapped down below the gap fill, which was that level we were looking as a possible price target at 34.35, so we are still looking bearish below that support. The industrials were down 2.42% today, breaking down below the 20 moving average and very likely trying to come down to fill the gap at 97. The healthcare sector was down 1.83%, coming right back down towards this support at 137. And as long as the bulls can bounce it from here, they can hold on to the bull trend and continue to march higher. The energy sector was down 0.61%, still bouncing from that support at 84, but also with the price action below all the moving averages and developing a bear trend. So on a break below 84, look for a test of $80. So jumping back over to the S&P 500, without a doubt, today was a bearish breakdown, losing some very critical support for the bulls. But what we don't know is if we're getting this elevator down crash event or if we're just going to start marching lower for the rest of the year. Typically, this is a very bullish part of the year with seasonality, but you can't trust seasonality by itself. You still need to follow the price action. And right now, the price action is telling us we're losing support. So continue to be cautious. And if we break these support levels, look for that next leg lower. And we are starting to break out of the trading range that we've been going absolutely nowhere for an entire month. So I still think this next leg in the market is going to be very large and it could be starting to the downside. So use great risk management and understand the larger degree trend is still a bear market with lower highs and lower lows. Also, don't forget I have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. I think now is a great time to be a bank member, so if you want to learn more or you want to learn how to subscribe, just click on the link in the description of this video. If you're looking to become a better price action trader, consider joining us at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.